So I'm Trevor, this is Marla. Just, I think the introduction sort of covered it. So Midwest is a property developer and landlord. Home for us is Saskatoon. We have property in Saskatchewan, in Alberta, and then in a handful of different states, mostly in the western part of America. So we're really in the landlord business. I invited Marla to sit in with me for two reasons. Number one, she's smarter than me, and secondly,
I don't think so. Thank you.
Just a different, unique perspective. Being on, there's more than two sides of the table here between, the landlord, tenants, and then the real estate professionals that sort of that see both sides of the equation. So I thought Marla would bring a neat perspective to the conversation.
Well, thank you for having me as well, Trevor. And so part of my role, so I'm a commercial real estate consultant with ICR Commercial Real Estate in Saskatoon. We have a property management division with over 850 tenants. So during all this, definitely have had multiple conversations with various different tenants, various different landlords, and everything in between too. So that's kind of where I can attest to and make my comments on.
So we want to make this conversation as useful and informative to whoever's out there watching. So if you guys have questions, feel free at any time to send in a question, and I'm fine interrupting sort of the current discussion to address your question or steer the conversation into whatever's meaningful for you guys. So sort of the big thing here during COVID, from the landlord's perspective, probably the number one, two, and three things that happened was what happens to rent. So, in Saskatchewan, lockdown started probably about the 17th or 20th or something of March.
Yep.
And we have a couple hundred tenants, and what we did is, between Ken and I, we sort of split our tenant list into two, and we had a personal conversation there on the phone because of COVID, but we had a personal conversation with sort of the decision maker at every tenant, just sort of letting them know, number one, hey, we're here for you. We want to work through this with you. Where are you at now? Where do you think you're going to be? How can we work together to make sure that basically we're still your landlord and you're still our tenant 3 months, 6 months, 12 months from now. At that point, we really had no idea how long this was going to last. We still don't know how long it's going to last, how deep it's going to go, what helps out there, who the casualties, both I say financial casualties and sadly human casualties were going to be. Now I think everyone's a little bit more optimistic that we're not very likely to hit the worst case scenario, but really all the conversations were about rent to start. We had a bunch of tenants. Some guys called and just said, I think I'm going to get in a little bit of trouble. Lease is a significant expense right now. I laid off all my employees. Rent is then, my biggest cash outflow. I don't know how many months I could pay the rent, or I don't know what's going to happen if I pay the rent and I'm going to have no cash to do whatever or to try and operate, pivoting their business and try and operate to earn some revenue. So certainly that was the discussion. We had some tenants that didn't think that they needed to pay the rent, said, hey, it's not my fault, I didn't shut down, so if I can't operate, I don't want to pay any rent. That was probably a few rare cases, but.
I think it was a massive learning curve for everyone. We're all in this together, and this is something new. And so when that middle of March came around, it was a lot of information collecting and gathering, and not just from what the federal government and the provincial government were saying, but understanding the situation of a landlord, which is unique, it's not the same, and understanding the situation of a tenant. And that is unique, and it's not the same. One restaurant user is not the same as another. So a lot of it was just trying to gather as much information to assess the situation and determine what is the best course of action. And I was actually pleasantly surprised in Saskatoon to the amount of time, consideration, and energy that both parties were putting into actually looking into each unique situation and determining not necessarily what was best for a landlord or best for a tenant, but what's best for both to get through this and survive. I don't think there was any landlord that I dealt with that wanted to see their tenants go down and not see them get through this. And so that just showed me the sense of community that we have here in Saskatoon, and that was really great to see. We do have a question here, sorry, as to what are some of the best guesses on the impact of COVID. So maybe we can flip to that with it. There's a lot of different conversations about this, and a lot of it I think we have to look at, take it into the sectors as retail, office, and then industrial. Industrial users have, I'm going to say, in a generalization, have not been hit the hardest as to our retail and office users. They've definitely had to redo some of their operations and rethinking how they're going to get their supplies, get their product out, various things like that, but definitely not to the extent of forced closures or anything like that as retailers. So maybe do we want to discuss retail and what the future of retail has?
Sure. Well, one of the sort of hot topics in retail over the last few years is, the last handful of years, has been sort of the emergence of e-commerce and how is the retail landscape changing. You know, on a large scale, if you look at enclosed shopping malls, department stores, you know, in Canada, Target, in America, JCPenney, Sears, you know, there are all kinds of larger scale retailers whose business models were very, very successful for decades. They're not relevant, they don't work anymore. So there's already been a shift in the retail landscape because consumers are buying more and more goods online, and large scale retail has already seen a shift. I know a couple of the real estate conferences we've been to in the last couple of years, there's talking about indoor shopping malls and how they're going to be repurposed, and there's going to be less goods purchased in the mall, and people are going to go there more for experiences.
Yeah, I definitely agree. I think the focus is going to have to be on the experience of the end consumer. And in that, it's, you know, what can I provide my consumer that they can't get through online shopping? And, you know, this is something, I can't speak 100% for it, but I think this is something even the owners of Midtown Mall recognized, and why they decided to go forward with their extensive renovation on the mall. It's to bring that experience to the end consumer, because yeah, I could go online and order through Hudson Bay, Aldo, whatever store they have there, but I want to go to the mall to experience the socialization, to actually feel in touch and things like that. And so I think businesses are going to have to focus really on what value add they're bringing to their consumers, and how are they going to magnify that through the use of their commercial space.
Now, one of the other really interesting and impressive things that's happened in the last 3 months is the movement to support local businesses. No offense to anyone that's an employee of a large corporation, you know, large retail corporation, but you know, I haven't seen a lot of online campaigns about, oh, make sure you support your neighborhood Best Buy. But there's, you know, all these small entrepreneurs that they've basically developed fan clubs where, you know, customers of some of these small businesses, whether they're retailers or restaurants, the customers are not only continuing to support them in, you know, I say alternative ways, but they're also helping advertise for local small businesses. And that's just, it's not that it wasn't done before, but that's something that's really spurred up in the last couple of months here. And I think there's been a resurgence of small local businesses. Unfortunately, there's probably going to be some businesses that don't make it, but I think that there's some businesses that, as they make it through it, will probably have a little bit more of a devout following, and there's more of an awareness for the consumer to support local businesses, and if they don't, hey, they're not going to be around anymore.
Yeah, and definitely, you know, there's, as each day goes by, I'm seeing more confidence in Saskatoon's marketplace in the retail sector. This is what a lot of people don't know, but I get the forefront of it. We are doing deals in retail, and it's happening. And I think a lot of that is spurring from people's attitude that, yes, we understand that this has happened. We know that we're going to have to change a few things that we do within our business, but business needs to carry on. And a lot of these too, we just have needs for different services, and that's not going to go away. You know, it looks from the reopening of salons. I didn't talk to a salon owner that actually decided to open that wasn't booked through the whole course of June with that. And I think that shows that people still want those services, and there is a demand and there's a need for it. So that's definitely something that I think will still remain. How long that will remain, well, that's something I don't have the crystal ball for, but I think that it'll still be around for the next 5-10 years for sure. It's also the confidence with Dr. Shahab stating that we're not going to go into another isolation, that with the use of the PPE and social distancing, if we do get another outbreak, that's probably not a likelihood of happening. So that's bringing certainty back into our business owners, which is definitely needed right now.
Another thing, sort of piggybacking on what I was talking about before with the e-commerce, I think that there's been, I don't know exactly, but there's probably been 5 or 10 years worth of evolution in terms of technology adaptation in the last 3 months. All kinds of people that said they were never going to buy online, didn't want to figure it out, don't have the technology, they always want to be in, hey, they figured out how to get their groceries, they figured out how to get whatever they need online. So in terms of what is the retail landscape going to look like post-COVID, businesses that are, I say, internet proof, that are providing that experience, whether it's, you know, professional services. You can't go to the dentist online, you can't get your hair cut online. You know, there's certain businesses that I think they'll resume and they'll be strong. And I think that there's going to be some, you know, sort of the traditional bricks and mortar retail businesses that, hey, probably the end of those business models has maybe been accelerated a little bit here, just because there's been that adaptation of online purchasing.
Yeah, and I definitely don't think we can't be so blind to think that we're not going to see changes in real estate. Definitely, you know, it's going to be to the individual owner of the property to decide what to do. But in real estate, it comes down to what is the highest and best use. And if an owner is facing more and more vacancy because the retailers are just not surviving, maybe it's changing that. Maybe it's changing it to senior housing. Can you go up and build a tower? Maybe it's changing it to residential housing and apartments if it's something in the downtown core, an area that suits it. People are going to have to get creative, and a lot of this is going to stem from different technology. I think we're going to see a lot of changes maybe in construction. Construction is going to have to come up with some different innovations to maybe modify these buildings and change them to different uses as well. It's just going to have to be, again, a more individual property analysis of it. And with that, looking at office, definitely the big hot topic is working from home versus office sectors. In my opinion, I think it's a blend that employers are going to have to offer. I've always had the opportunity in what I do to work from home. More often than not, I go to the office. I'm going to say I'm there 80% of the time versus working from home, just because efficiency for myself, productivity, and I want to get out of my house. But that's me, and that's my need, and it may not be the need for every employee. So I think for employers to retain the talent that they want, there might have to be some flexibility in, say, part-time working from home, coming to the office. It really will depend on the duties of the job and that position with it.
Well, one trend in office probably in the last 10 years, coming out of the 2008 recession, as offices spooled up and there became more demand for office space, one of the things that happened was there's a densification of the office. There's a lot of companies adopted open open floor plans, where, you know, before if they had 250 square feet per employee, you know, they shrunk that down. Instead of everyone having private offices, they had small cubicles, they had work tables. You know, there was sort of a change, and that was sort of a trend that a lot of people brought in, where, hey, you got 5 people working in one room and there's a lot of chatter and there's energy. But with that comes the inability to social distance. Everyone's in everyone else's face. You know, I actually read a couple of pretty interesting studies. There was one in Seoul, South Korea. It was a call center. They didn't shut it down.
Yep.
And 43% of this entire call center ended up contracting COVID-19 because they did not have the ability to separate, to create that physical distance, and the virus went rapid and infected half their staff.
I think also too, for business owners in office sectors, they're really going to have to start looking at their corporate culture and having these discussions as what they want to see for their business in the future. Oftentimes everyone's just busy with their every day-to-day life, and these things often get overlooked at times when companies are looking at new office space. But if they can sit down and take the time to actually, you know, strategize company culture, what they want to envision to see for their employees, those questions are going to dictate what that company will need for an office setting. And so again, it's not going to be the one glove fits all. There's definitely going to be companies, you know, I'd say law firms, accounting firms of those nature, that they are going to still need an office space. There's just collaboration that has to happen in a setting with together people being in the same location. But maybe, like Trevor has alluded to, they're converting to more private offices and leasing out a little bit more space to allow for this social distancing. We also looked at a case in Chicago you had sent me that was a new office development that catered towards COVID-19. Everything that was designed in that building is to prevent the spread of COVID-19. So there's things like toe tap buttons for elevators. Now people don't, so they don't have to actually physically touch buttons to get through the elevator. That's something that I can see being adopted here in Saskatoon and going forward. I don't think necessarily it will be something we'll see right away, just cost prohibitive, but definitely I think owners will probably start looking into what those costs may be.
Yeah, and I think some of the other features of the building are things you probably see in an airport right now. Hands-free toilet flushing, hands-free soap dispensing, faucets, you know, more sinks than you need just so that people can spread out. Certainly we'll see some of that stuff. I guess the only thing that everyone needs to remember is all those features cost money, and property developers would gladly put them in as long as the users are willing to pay for them. And I guess that's what the market will decide is, are people prepared to pay for permanent solutions to something that I don't know if we know if it's a shorter or long-term problem. Another question.
Yes, so we got a question here asking to better understand the government announcement for rent payment from both landlord and tenant perspective. Can I ask my landlord to pay for the extra cleaning and sanitization costs?
Sure. So maybe just to put a little bit of, you know, sort of context in terms of the rent subsidy. So, you know, as a landlord, you know, we always try and think about looking at it from the landlord's perspective, understanding each tenant's perspective, you know, and we look at a tenant, okay, well, they may or may not have been forced to close. Again, obviously it depends. There's different businesses out there, you know, they probably had to adapt to restrictions, you know, even if they didn't have to close. Anyone that did close generally feels like it wasn't their fault. Hey, the government forced me to close down, so hey, if it was up to me, I'd be operating and earning money and have no problem paying my rent. But you know, it's not my fault. Lots of tenants only had so much money saved up. You know, they had saved for a rainy day, but maybe not this pandemic downpour. They don't know how things are going to unfold. They don't know if it's going to last 1 month, 3 months, 6 months, 2 years. A lot of tenants we know that they've laid off some or all of their staff, and rent is probably their biggest expense. So you look at what did the tenants do? Well, some tenants kept paying because they could, some kept paying because they knew they should, because they weren't particularly affected. We had conversations with pretty much all of our tenants. We tried to call out before they called us, but lots of them, they just wanted to know what can the landlord do? What are the options? It was just, hey, this is something that a lot of people never thought about. Honestly, it's something as a landlord we had not really ever thought about. What if we have 100 tenants that all don't think that they can pay the rent or can't pay full rent all at once? It's just not a scenario we ever dreamt of. And then looking at it from the landlord's perspective, right? And depending on who all the audience is right now on this call, just appreciating that being in real estate, whether it's residential or commercial, it's generally a pretty low return, low margin gain. You put out $1 and you get 6, 8, maybe 10% return if you're doing really well. It's not that there's not money in commercial real estate, but it is pretty low return. The reason that it's low return is because it's generally perceived as pretty low risk. So property developers say, hey, this project is pretty low risk. I'm going to build or I'm going to buy this piece of commercial real estate, and I'm willing to take 8% return, but I know that it's going to have certain income. The rent is always going to come in like clockwork. That's the appeal to commercial real estate. Again, for someone to appreciate a property developer or landlord's position, they may have large debt obligations. I know a lot of the things in the media just said pretty much every lender will defer all the mortgage payments. That's not necessarily the case. I've, both in our own personal experience and talking to lots of other landlords we know, there's some banks that were very, very accommodating, willing to go to interest only or willing to defer payments totally. And then there's other ones that weren't at all. They just said it's just not in the table because they've got downstream obligations, and their lenders weren't willing to do anything at this point. So that left the landlord jammed up because the lender is saying, hey, I need the entire mortgage payment, and the landlord's in between a rock and a hard place where the tenant's saying I can't pay the rent, and the bank is knocking at their door. So there's just certain pressures, and everyone needs to understand all the different things that are affecting the other party on the other side of the table. So, sort of look at, before we get into the rent program, what did a lot of landlords do? Because if we go back in our time machine, there was probably 5 or 6 weeks of discussions between renters of commercial real estate and lenders before we knew if or what the government program might look like. So, hey, what happened in the real world? Some landlords took a really tough line and just said, hey, rent is due. That's just the way it is. Some people maybe took a little bit of a softer approach and said, pay me some now, some later. I'm not sure how we're going to figure it out, but we need some cash flow coming in on our end, but we realize you maybe can't make the full payment. Certainly it's compromise, but it still puts pressure on both people. It puts pressure on the landlord because in the short term, it's having to finance a tenant, and that sometimes puts a lot of pressure on the tenant too, because the tenant has deferred its rent obligation down the road, and at some point it's going to have to pay that rent back, and depending on the arrangement made between that landlord and tenant, may put a lot of pressure when the tenant resumes business, because it's going to have higher than normal overhead costs at a time when its sales maybe haven't fully recovered. Again, it's all specific to the business the tenant's in. I've heard a lot of scenarios where tenants and landlords made deals and said, hey, maybe we'll reduce the rent by some factor right now, or write it right off. Again, this is all specific to the scenario. But in exchange for reducing the rent, they've said, hey, we're going to have a landlord-tenant relationship when times are bad, but we're going to commit to each other when times are good. So the trade-off really was the landlord said, hey, I will accept some kind of reduced rent now in exchange for a longer-term commitment where you're going to be my tenant. And certainly we've done a fair amount of those where we just sort of said, hey, we want to work with you in good times and in bad. Now is a bad time. We're going to work with you. We're going to accommodate but we want to make sure we're your landlord when times are good again. So then getting into the, I don't know if you want to, I don't know if you want to build on any of that before we get into the program.
No, I think that kind of covers everything that I would say in terms of what was happening. It was a lot of individual circumstances and looking at, okay, how long have you been a tenant? Where are you at in terms of your financials right now? When is your lease up? How much are you paying? Looking at the scenarios and saying, okay, what do you need to get through this? And when I say that, I say need versus want, and those sometimes were very two different things in that. So really trying to assess that. So as most retail sites, it's not just one tenant, it's a multitude. And so again, landlords, depending on their circumstances, weren't able to give a rent abatement to everyone because they weren't getting any leeway on their mortgage payment. So again, it was very much looking at every specific situation and recognizing that and trying to come up with the best plan going forward. And then the Canadian Emergency Commercial Rent Assistance came out. Pretty much after all this underground work went into and came out, and a lot of agreements were made between landlords and tenants before this was even announced or all the details were given. So
yeah, and I remember it was probably last Friday in April. I remember watching it live, Trudeau's announcement. And certainly the initial announcement had some level of detail, but it basically said, but by the middle of May, we'll figure out how this program is really going to work. And we had a handful of tenants that called us right away, and all they heard was, I only have to pay 25% of my rent. From the landlord's perspective, we said, that's part of it, but we don't know all the parameters. We don't know exactly how we're going to determine who qualifies. We don't know if we're even eligible as a landlord to participate in the program. There was just this real gray period where we didn't know how it was going to move forward. Certainly now we know answers to most of our questions, but still not all of our questions. But basically what the program is, for anyone that doesn't really understand it, I guess there's probably a lot of people. The program is designed to help businesses that were most impacted by COVID-19. So the threshold that the federal program has, it said, if your revenue for the period of April, May, and June of this year is down by 70%, so that means you cannot have more than 30% revenue. So if your revenue is down 30% from either the same,
and that's the average over the 3 months.
Same period last year, or your average monthly revenue from January and February this year. If you're down 70%, you would be eligible. So there's certainly a lot of businesses that are left out. There's tons of businesses that probably only have half the revenue they would normally experience. Those businesses are just not eligible based on the federal criteria. So that's the big thing. So that if the tenant does not have a 70% decline in revenue, then it's just not eligible. Another thing is the landlord has to agree to be part of the program, and the way the federal program worked is the government is willing to lend 75% of the gross rent. And I guess just backing up, gross rent meaning the base rent plus all the occupancy costs. So in Western Canada, for sure, most leases are based on a net plus occupancy cost basis. So that means the property tax, the insurance, the snow removal, the window washing. It's certainly particular based on whatever type of building you rented, but all the added services that the landlord or property manager provides, and they're billed through at cost, the government said the landlord has to write off 25% of the base rent, and also 25% of all those flow through occupancy costs. And the tenant can pay between 0 and 25%. The landlord can obviously write off more than 25%, and the government would chip in 50%. and the conduit for it, it's a loan between the federal government and the landlord that the landlord has to choose to apply for, has to choose to participate in the program. There's a lot of paperwork. So backing up to the question, hey, if you can prove to your landlord that you had that revenue and your landlord elects to participate in the program, basically there's a whole bunch of paperwork that the landlord would have to put through.
As well as the tenant. There's paperwork that the tenant has to put
through the landlord.
Yeah.
For the program to work. And what it would do is it would give, basically, the tenant would end up paying 25% of that total gross or your total monthly payment, and the landlord would eventually recover the rest of it through a forgivable loan from the federal government. Some of the other nuances of that program is there needs to be there's an affidavit that the tenant has to sign certifying certain things. There's also a rent relief agreement between the tenant and the landlord where they're both agreeing to certain things, but the biggie would be that basically if the landlord applies for the government to fund some of the tenant's rent, the landlord is agreeing not to consider it. It can't be a default of the lease. For lack of a better term, the landlord can't evict the tenant for the periods of April, May, and June of this year.
There's some contingencies on that as well. You have to have a current lease in place if your lease expired. So that notification, I want to say our letter was June 4th. So if your lease expired before June 4th, then there is a Schedule D basically that states the remedies a landlord can do. They couldn't kick out a tenant, but if your lease expired, you wouldn't fall under this. There was also, I thought, was a little gray area. It stated if the tenant abandoned the premises. Now, there's a lot of different definitions in the real estate world as to what abandonment is. So that I felt there could be some discussion on that, because technically if you were forced to close down, you weren't working, is that abandonment or is that not? With that. So again, not quite clear on all those types of questions and rules and regulations, as well as just the application forms with it. And then as well, both parties, if you go forward with this, the landlord and tenant can be subject to further auditing from the government down the road as well. So that was something that I felt a lot of providing that communication to both landlords and tenants on the program, and whether they were ready to entertain this and move forward with it. Because we have yet to see what that will look like come next year and what will happen in regards to that. So few things with it. My best recommendation is reach out and talk to your landlord and have an honest and real conversation about your situation. Know what your financials are and know what you need so that you can ask for what you need to get through this. And sometimes it may just be, you know what, the landlord will say, let's not, maybe the answer is this program, maybe it's something different, that a solution that the landlord and a tenant can come up together with. So it's just having that communication is the first step and is needed very much so.
Yeah, and I think the other part of the question was about the landlord paying for new expenses.
Yeah, so extra cleaning and sanitation costs, typically I would say in a normal net lease, a landlord can provide that, but that's usually a cost that would get funneled through occupancy costs, and tenants pay based upon their proportionate share of the building. Now, again, unique situations. I've had another landlord that I deal with. She said there's common washrooms in the site, and so she said, I'm going to up the cleaning on that just for the interim, and she's recognized that that's a cost that she was going to take on. It's not going to be a long-term. If the tenants want it long-term, then that would be something that the tenants would pay for, but again, through occupancy costs. But this is for kind of this summertime until we get to the fall scenario, just so that people have a level of comfort using facilities that are there.
Without knowing some of the specifics, I would sort of say the norm in our markets right here would be that the tenants are, pre-COVID, the tenants were paying for 100% of the cleaning costs, and in our properties as a landlord, we want to be as absolutely responsive as possible. We will do as much or as little cleaning or provide any of the other services that a tenant wants. But, generally the expectation is that the tenant pays. So, if someone wants cleaning every night, basic wipe down, sanitation, we certainly have accommodated all of our tenants' requests, but for the most part, the understanding would be that the tenant is paying for whatever, if there's more or less cleaning, the tenant is paying more or less depending on what the new spec is. Just in terms of cleaning specifically, I think that's changed a lot, where normally cleaning would be to have the place looking spick and span, right? Everyone wants their chairs wiped, dusting, that kind of things, when, windows looking crystal clean. Cleaning has changed a lot in the last 3 months, and I think cleaners are spending a lot more times on doorknobs, surfaces, phones, any kind of common touch points. I think cleaning has really been refocused over the last couple of months, and it'll probably migrate somewhere back to between where it was and where it is now over the long term.
Yeah, and I guess too, it goes down to landlord's individual situation, whereas Midwest, you have the advantage of economies of scale. You could, versus if I was just a local owner and, I have to reach out to cleaning companies to take care of my own premises, I may get quoted a certain number, whereas Midwest say, hey, we'll come take care of 50 of our buildings in town. They may get a little better pricing, which then translates to their tenants as well. So some of that can be a discussion had through landlords with your landlord as well. We also got another question here is, what are the top tech change requests you're getting from tenants? For example, thermal cameras to access potential threat if someone has a fever. Well, I would say a lot of these tech changes have been implemented by tenants themselves. A lot of the big ones is obviously the glass shields and things like that. A lot have taken them on to do it just in terms for their employee safety and their customer safety as well. So that's come on. Long term, in terms of properties, I think we're going to see integration of the toe. I definitely think the toe tap in terms of the elevator is something we can be seeing as renovations happen to older buildings, as new development carries on. It's something that I think we'll just have to follow with that. There's the thermal imaging and things like that. I think it's more in terms of the company and what their feelings are towards their premises and their situations, if they want to add that or not.
At this point, honestly, you said sneeze guards, that's what I was going to say. By far the number one request was putting up plexi, or just people wanted to be able to physically distance in any kind of retail environment. Honestly, even a lot of the offices where there's reception and they didn't lock their front door and they had a little bit of traffic, they wanted to be able to provide that physical barrier between, say, the general public and their first point of contact in their office. I don't know that we've really had any requests yet for tech changes, tech adaptation in any of our buildings. I think some of it will come. I agree with you, the thermal imaging. We were out for dinner on Friday and I was thinking, is there going to be a change in the restaurant industry where there's everyone's scanning QR codes now for menu. There's not physical menus at a lot of restaurants right now, but are there going to be iPads or the equivalent to some kind of digital interface where you can just order your food, order your drink at your table? You still may have a physical person run it out, but will that be a change in the restaurant and the food and beverage industry where there's just less human interaction? I don't know.
And I think that's going to be more so for us as a society, our level of tolerance for AI integration. Like, is that going to switch to a robot giving us drinks and things like that? It's definitely the way the future could be heading for sure. But with anything that involves change, it takes time and people have to process that. So I don't think in the near future, that's something that we will see, but long term, it definitely could be. I hope that answers that question. Another question we have here is, can certain provisions of the lease be formally modified or added / deleted in the lease in exchange for the landlord making rent concessions? So the long story, I guess the short answer in all of this is, so if a landlord and tenant sign a lease, essentially that's the binding agreement, that's a contractual agreement. The only way that can change is if both parties agree to it. So usually if a tenant is coming to a landlord asking for something, they're going to have to give up something to get what they want as well, with that, and vice versa. It's not, this obviously is, the pandemic was an event that everyone's recognized and knows that modifications had to be made. And that's why I was saying it comes to the individual circumstances, and where I know us as a brokerage, we had to get creative in some situations as to, you know, doing things that we would have never negotiated in deals and things like that. For our deals that we're doing now, I was actually, I'm just in the process of negotiating one with a retail user who they would have, during COVID, they were mandated to close, but they're looking to get into a different location. And the conversation I have to the landlord is, to both parties, say, okay, you know what, we're not out of this. There isn't a vaccine yet. So to not have this discussion on the what if quarantine or mandated forced closure happens, I think we are ignorant to not at least have that discussion. And so whether it's a verbal agreement or in writing, I leave it up to the parties to decide, but both felt that we needed to discuss it and just to have a clear understanding, if this was to happen, what would be the protocol going forward. And so then I think this, if we do get into that, these parties, it takes the guesswork out of it. So they know, when you can have certainty in the future, you can plan for things. And I think that was a big thing that no landlord or tenant received during all of this. Is just, it was, even though we knew what was going on in China, I still, come March 1st, didn't think that this was going to be the way of the world a few months later. So I think a lot of us felt in that sense as well. So, you know, it's one too that when you enter into these agreements, to start renegotiating everything again, is a little redundant, but again, these are different times. So it's recognized, and that this isn't the normal way of doing business, and that we are still learning how our new normal is here. And so there's more discussions that could be had, but they really need to be warranted. I think a lot of landlords that I talked to, they had some tenants say, you know, not going to pay. They were open for business, they're making money, and saying they're not going to pay rent. And it's like, well, you know, this is a bill just like the utility bill, property tax, everything like that. You know, you need to give me a reason to help you out. And so that, I think, was the area where if you can come and give yourself a case and to say what it is that you need and your reasons why, most are willing to listen and try to come up with a creative way to help out with their tenants. Okay. I hope that answered that question. Do you have anything else to add?
Just the only thing I was thinking about as you're answering is, we had some of the most surprising responses we got from tenants, both in Canada and in the US, are major national tenants, that their initial response was they think this is a force majeure or an act of God, and they thought that they would have no legal obligation to pay the rent.
So maybe I'll stop. The force majeure clause in a lease, now there's a few variations on this, but typically the underlying tone of the force majeure is that if, say, an act like a war happened, tornado ran through Saskatoon, demolished everything, basically that would be the cause to terminate the lease. What's that?
And these tenants said, hey, it's force majeure. We think because this is a force majeure event, we don't have to pay rent. A couple things, and hey, they were lawyers for large tenants taking a shot at landlords, at all their landlords in blanket. A couple things. Generally, most times this wouldn't have been considered a force majeure. Second thing that was sort of interesting is a lot of these businesses were still open, so the tenants were still using the building, perhaps in a modified way. If let's just say if they were a fast food restaurant or a coffee shop, they maybe switched to pickup only or drive-through delivery, that kind of thing. But these tenants were still using the landlord's building, and their initial communication with the landlord was, we don't think we ever should have to pay you any rent for this period, even though we're using that building. That being said, I think most landlords sort of went back and said that's just not even at all a reasonable interpretation of what's going on or solution. And in those cases, most of the tenants came around pretty quick, but it's interesting because people really showed their true colors on both sides. We had some amazing and wonderful tenants that were very honest, told us, hey, I can pay you this much money. We want to work with you, and some guys that took a real hard line and eventually backed off, but you still remember how your landlord treated you or how your tenant treated you when times got tough.
Definitely, and I think going forward too, it's always been in my discussion with clients when they're looking at doing a lease transaction, to whether if you're working for a tenant, investigate your landlord, find out who your landlord is, know a little bit about them, because you're signing a 5-year lease, you're entering almost a 5-year marriage with them, and there's going to be, COVID aside, there's going to be something that comes up that you're going to need them to be on your side and to work with you. And so, it's usually always rent that's always looked at, but there's a lot of these outside factors that aren't really getting into the decision-making process. And I've seen it throughout my career in that depending on the situation, now it doesn't always happen through a course of a lease term, but depending, it could, be a costly decision to some tenants. And same with vice versa to landlords. I think a lot of landlords are going to be, they already did look into when a tenant would write an offer, look into their financials and things as well. But I think that's going to be looked upon even further to the sense to say, okay, what's your short-term viability and what's your long-term viability? Because again, landlords don't want to enter into, these short-term relationships. They want long-term relationships with their tenants. And so for the most part, most do. And so that's, I think, what we'll see a lot changing in terms of the real estate world is a lot, and that takes time. So I think deals are going to take a little bit longer to happen. And a lot of people I tell too, even if you're in your current commercial spaces, if you have a lease expiration coming up, you got to start thinking about this 18 months prior to your lease expiration to really understand, do you need to is relocation the right move for you? Is staying, what should you do to really make the right decisions for your business? Because the wrong ones is, again, it's just time and money is usually what that costs. With that.
Or if anyone else has other questions, feel free to note the question here. We'll address anything you want. I think about what's important to me as a landlord go forward. The number one thing landlords want is certainty. We're not going to make all the money overnight. It takes a long time to pay off a real estate project. So having a tenant with sort of strong financial backing is important. But the other part is sort of the integrity and just understanding the tenant. Potentially we're going to do more reference checking right now in terms of both can they pay the bill and will they pay the bill? As I alluded to before, people are showing their true colors, and there were some companies that were sitting on a mountain of cash, but their initial position is they wanted to hold all the cash and they didn't want to flow it through and honor their lease obligations. So from my perspective, this is something we already do pretty much all the time, but it's really important to know the decision maker on the other end, to know, hey, if there's an issue, no matter what it is, there's a problem with the building or a rent issue, and it's whether it's something the landlord needs or something the tenant needs, that we can have the conversation and we have a relationship with the person, and it's relationship based. Another thing that I think is going to happen is we're going to end up pre-negotiating what happens the next time there's an event like this. Mm-hmm. And it doesn't necessarily mean we're going to get all the rent or rent doesn't apply. And it'll really depend on the certain, the type of building, the type of user we're in. But it's like a prenup, right? Let's just agree on what's going to happen. Exactly. And then the rules are written. And it's not that we can't adapt from that, but there's if you go backwards, there's a big whole gray area. No one really ever thought about how they would handle this, so it was just sort of left up to people to negotiate it. But I think it'll be pre-negotiated before it happens next time.
Definitely, I'm noticing that right now as working through deals, it's a negotiation topic. Not necessarily putting it under a force majeure clause. We're kind of creating our own distinct one for this pandemic or something of this similarity. And it's also for you to know that I think a lot we're agreeing that the solution will be based upon a 3-month period and then reassessed, because we're basing it off our first go around, which was less than a 3-month period. So we kind of have our experience to go off on that, but we also have the understanding that it could go longer than that, and which I hope that we don't ever have to see that. We'll be in a far worse situation with that. But again, that's something to put a definite on the future that we just don't know. I think both parties going into it understand that it's something that would have to get reevaluated, but at least for now, if you have that agreement of what would initially happen, there's less panic and there's less fear. And so then business owners can focus on what they need to do to survive a second go around as well, instead of having those discussions with their landlord. Because like I said, these discussions weren't just 15-minute discussions. These were days and weeks going on trying to figure out, again, what one tenant needs versus another.
I think probably one question that's on a handful of people's minds, even though it hasn't come up, is right, what's going to happen with rent go forward? And rent is really a function of
supply and demand.
And in terms of, if you look at new construction right now, new construction has got to be brutally expensive and pretty painful in terms of all the red tape, if we're talking about Edmonton, Saskatoon. Land is expensive. The cost of complying to the new 2019 energy code, a lot of the costs of materials going into new builds have just went up disproportionately to inflation. So the cost of new construction is pretty high, and in a lot of cases, the current rental rates just don't support new construction. So then you look at, okay, but what's the supply market like given the existing buildings? Well, it depends what kind of building you're looking at. Like in Saskatoon right now, the retail vacancy rate's been pretty low for a while here. So retail rents are fairly strong. Yeah. But if you're an office user, whether you're Calgary, Edmonton, Saskatoon, there is just a tremendous amount of new office space, coupled with the fact that the resource market's sort of in the toilet right now. So there's been very high vacancies. Saskatoon's going to get worse before it gets better. And then, the third factor that you're going to factor in now is the COVID, and is there going to be a decreased demand because of work from home, or, well, that and the fact that some companies just aren't in the same financial position to expand. So there's not going to be very strong office supply for the next little while. So I think, honestly, there's going to be some real deals in the office market, not as much in the retail space.
Well, yeah, and rightfully so, and I think that'll be individualized on the building. That's where something like myself or a broker can help to assess, say, okay, here's the reason why the price is this for this building, and here's the reason why it's this price for this building. With that, there's also, as we've looked at, a change to more a membership-based co-working space. So there's examples in the States of WeWork. There's the Eureka building in Toronto, and they have one in San Francisco. And then Path Co-work actually is in Regina, where it's kind of the business center model, but basically you have the option, you can pay a day pass to come in, you can pay a month pass, or a premium one where you have a specific workstation that where you go for the month and that's yours alone. So something more geared towards definitely the tech industry, individual contractors, whether it's you know, designers, content creators, that type, mortgage brokers, more individual based users in that sense, where I feel it's almost, you're, instead of a corporate culture, you're creating a building culture, and then people are going to go there based upon that building culture. So there's examples of that, like these are already in existence in these other locations. So that's something that I definitely think that Saskatoon may adopt. Now, the extent of that, are we going to have one center like that versus are we going to see, you know, 10 buildings downtown convert to that? That's again, where it comes down to the supply and demand is going to dictate that. And you know, that's what we're going to have to gauge and see. I definitely don't think that's a model for every business. I definitely think there are certain ones that they are going to have to keep their separate premises to keep their company culture, confidentiality, various other things in one, and have that office space. So they're just going to have to look at the efficiencies of what their office space is right now. And, you know, does it function with COVID or does it not? And if it doesn't, how can we modify it? Or is our lease coming up and should we be looking at other locations? So I think we're going to see maybe more shifts, more location changes for office users, not necessarily maybe a spike in activity, which decreases vacancy, but definitely probably in the next, we'll say 0 to 3-5 years, there might be some changes in how people relocating from their locations in that sense.
Awesome. Well, thank you guys for sharing all of your experiences over the last number of months, all of your advice, all your observations. Really appreciate your time and your time to prepare for this chat with our group. For anyone who didn't get to ask your questions, sorry, or if something comes to mind afterwards, please feel free to email us at info@manicmentorship.com. Please note that our email address has actually changed, so it's manicmentorship.com, and we'll make sure to forward those emails off to Trevor and Marla and get answers to your questions if anything comes to mind afterwards. But in the meantime, Trevor and Marla, really appreciate all your time and effort here with us today. And again, like I say, you guys have been friends of the Manic Mentorship Program for many, many years, and so we really appreciate your continued support and participation.
Thank you.
Thanks for having us. Anyone, we're happy to answer any questions. If anyone emails, we'll make sure we get back to you.
And general comments too. The big thing is keep your communication open. The more that a landlord can understand the needs of a tenant, the better they can implement plans and make these decisions based upon what they actually need. Nobody wants to develop a building that isn't going to be suited for somebody. So having that information is really critical, and it also gets you as a business owner what you need for your commercial premises as well. So that is, I would say, one important item to communicate.
Awesome. Great advice. Well, thank you guys.
Thank you.
Thank you everyone for joining us. Just keep an eye on our social media and we'll let you know when we have our next seminar. Thanks everyone. Have a great day.
Thanks.
Thank you.
Thank you.